You've probably been hearing a lot of buzz about the new tax laws rolling out in 2025. Every year, tax rules shift a little, but this time, the changes are big enough to make a real difference in your paycheck, your savings, and maybe even your retirement plan. The question is simple. Will these new laws help you keep more of your money, or will they quietly take a bigger bite out of your wallet? Let's break it down clearly, simply, and powerfully, so you can walk away knowing exactly what these new tax rules mean for you. First off, let's set the stage. The government has introduced a major new tax package, one that's being called one of the biggest updates since 2017. And while the tax brackets themselves haven't changed much, those familiar 7 brackets are still here, ranging from 10% to 37%. The real impact comes from the deductions, credits, and limits that shape how much of your income actually gets taxed. Think of it this way. Your tax rate is like the sticker price on something, but your deductions and credits are like the discounts that really decide what you end up paying. Now, let's start with what most people will notice first: the standard deduction. This is the amount you can subtract from your income before any tax is calculated, and in 2025, it's gone up. If you file as a single person, your standard deduction rises to around $15,000. For married couples filing jointly, it jumps to roughly $30,000. That's not pocket change. This means that a bigger chunk of your income is now tax-free. You could easily see a few $100s more in your refund or a little less taken out of your paycheck each month, depending on how your employer adjusts your withholding. It's one of those quiet changes that you don't really feel right away. But over the year, it adds up. But there's another group that's getting an even sweeter deal: seniors. If you're 65 or older, the new law adds an extra deduction of up to $6,000 on top of your regular standard deduction. That's real relief for retirees who are often living on fixed incomes. For years, older taxpayers have complained that their tax breaks haven't kept pace with inflation or the rising cost of healthcare. This change helps balance that out. It means less taxable income, and for many, a smaller tax bill when they file next year. Now, let's talk about families. Because parents, you're getting a little help too. The child tax credit has been bumped up again. For 2025, it's worth up to $2,200 per qualifying child. It's partly refundable, meaning even if you don't owe any taxes, you could still get some of that money back as a refund. And because it's indexed for inflation, it could increase slightly each year moving forward. That's a small but meaningful change, especially at a time when raising kids has become more expensive than ever. For families juggling daycare, groceries, school fees, and the never-ending list of expenses, every dollar counts. Now, let's shift gears for a second and talk about something that's been a hot topic for years: the SALT deduction, which stands for state and local taxes. Back in 2017, a cap of $10,000 was placed on how much state and local tax you could deduct from your federal taxes. For people living in high-tax states like California, New York, and New Jersey, that cap was brutal. It meant a lot of upper-middle-class families lost out on deductions they'd relied on for decades. But starting in 2025, that cap is being temporarily raised to $40,000 for certain filers. It's not for everyone. There are income-based phase-outs. But if you live in one of those states where property taxes and income taxes are steep, this could make a big difference. It's not permanent, though. The expanded limit is only set to last through 2029. After that, Congress would need to extend it again, or it'll snap back to the old limits. So, if you can take advantage of it now, Do it while it lasts. Now what about business owners, freelancers, and people with side hustles? Because for them, taxes are a whole different game. Some of the rules around business losses, depreciation, and pass-through income have been tweaked, and a few temporary provisions have been made permanent. If you run your own business, this means more flexibility in how you report your income and expenses. It could mean bigger deductions for equipment purchases or expanded write-offs for certain kinds of business losses. For gig workers and self-employed individuals, it's worth talking to a tax professional this year, because these changes could either save you a lot or cost you more if you're not aware of how to adjust your strategy. But let's not sugarcoat it. Not everyone comes out ahead. Some of these benefits phase out as your income rises. For example, the extra deductions for seniors and the boosted child tax credit start to shrink for high-income earners. If you're making well into the six figures, you might not qualify for the full benefit. And if you live in a high-cost area with a big salary, you might find that the increased SALT deduction doesn't help as much as you hoped, thanks to those phase-out rules. In short, these changes are designed to give the middle class a break, but not necessarily the top earners. Let's talk about the ripple effect, because even if you're not thinking about taxes every day, these laws can influence your financial life in surprising ways. For example, if you get a little more take-home pay because of higher deductions, you might decide to invest that money, pay down debt, or finally start that emergency savings fund. Over time, those small differences can add up to thousands of dollars. But there's also the flip side, bracket creep. That's when inflation slowly pushes your income higher, but your tax bracket doesn't move up fast enough. The government says the brackets are inflation adjusted, but if your raises outpace the adjustment, you could find yourself paying more in taxes, even though your real purchasing power hasn't increased much. So while rates stay the same on paper, your actual tax bill can still rise. Another area worth noting, charitable contributions. The standard deduction has gotten so high that fewer people itemize their taxes now. That means fewer people are writing off donations. The new law doesn't change much in that area, so if you're used to claiming your donations, you'll only benefit if your total itemized deductions exceed the standard deduction amount. In other words, unless you're donating large sums or paying very high state taxes, you might not see a tax break for giving this year. Still, giving is about more than deductions, but it's something to be aware of. Now here's something a lot of people overlook, the psychological side of tax changes. Whenever new laws come in, people panic. They wonder if they need to change everything, their withholdings, their investments, even their lifestyle. The truth? You don't need to overhaul your finances, but you should take a moment to reassess. For instance, if you're used to getting a big refund every year, that might shrink under the new system because your employer is withholding less. That's not a bad thing. It just means you're getting more of your money during the year instead of waiting for it at tax time. On the flip side, if you usually owe taxes, you might owe a little less this time around. Either way, it's smart to run the numbers and make sure your withholdings match your goals. Nobody likes surprises in April. Another angle, how these changes affect the housing market. The SALT cap increase could encourage more people in high-tax states to buy homes again, since property taxes will be more deductible. For years, that $10,000 cap discouraged homeownership in some areas because buyers couldn't deduct enough of their local taxes. Now, with the higher cap, it could bring a bit of life back to those markets, though it's still limited to a few years. If you're planning to buy or sell, this could influence timing. There's also a political angle. Tax law isn't just about numbers, it's about values. These new rules show that the government is trying to appeal to middle-income voters and seniors, offering relief where it feels most needed. But the cost of these changes to the federal budget is enormous. Billions in lost revenue means higher deficits unless offset by spending cuts or other taxes later. That's why experts are already warning. Don't assume these rules are forever. Future Congresses can tweak, repeal, or replace them, depending on the economy and who's in power. So think of 2025's tax breaks as an opportunity, not a guarantee. If we zoom out for a moment, what does this all mean for your wallet, your lifestyle, your peace of mind? It means that the government is giving you a chance to breathe, just a little. The average worker, especially in the middle class, will see a modest but noticeable boost in take-home pay. Seniors get relief. Families get help. High earners stay mostly flat. It's not revolutionary, but it's not nothing either. These are the kinds of incremental changes that add up over time, but only if you take advantage of them. Too many people never adjust their financial plans when tax laws change. They keep doing the same thing year after year, missing out on deductions, overpaying on taxes, and leaving money on the table. Don't be one of those people. Take the time to look at your situation, whether you're single, married, retired, a parent, or self-employed, and ask, how can I use these new rules to my advantage? Maybe it means itemizing when you didn't before. Maybe it means adjusting your retirement contributions. Maybe it means timing certain expenses differently. Smart tax planning isn't about loopholes. It's about awareness. And that awareness can literally put money back in your hands. Think of it like this. If you save even $200 a month through smarter tax planning, that's $2,400 a year. Over 10 years, that's $24,000 without earning a penny more or working a single extra hour. That's the quiet power of understanding how tax law works. So, here's your action plan. After you finish watching this video, go log into your payroll portal or check your pay stub. Look at your withholdings. See how much is being taken out for federal taxes. Then compare that with the new deduction limits for 2025. If you see that you might be overpaying, adjust it. If you're unsure, talk to a tax preparer before the end of the year, not after. It's easier to fix things now than when you're rushing to file in April. And if you're self-employed, take a fresh look at your estimated payments and deductions, especially around business expenses, home office rules, and depreciation. The new provisions around business losses could make a real difference in how much you owe. Let's also be real. Taxes aren't fun to think about. Most people would rather do almost anything else. But the truth is, understanding these laws gives you control. And control means confidence. When you know what's coming, when you understand how it affects you, you can make smarter decisions with your money. You stop reacting and start planning. That's the difference between feeling like taxes happen to you and using them to your advantage. Now, if we look at the bigger picture, this new tax landscape is really about balance. The government is trying to keep the system stable while still giving people a sense of relief. It's not radical, it's strategic. They've left the core structure intact, but adjusted the details in ways that touch the everyday taxpayer. And whether you agree with it politically or not, it's your job, your responsibility, to know how it affects you. Because no one else will look out for your wallet the way you can. So in 2025, Don't just file your taxes. Own them. Know your deductions. Know your credits. Know your limits. Whether you're 25 or 75, these changes matter. The difference between someone who understands the system and someone who doesn't can be thousands of dollars a year. So pay attention, stay informed, and make your money work harder for you. Because at the end of the day, taxes aren't just about numbers on a page. They're about your life, your home, your family, your future. Every paycheck, every deduction, every refund tells a story. The story of how well you understand the rules that govern your money. And now that you know what's changing in 2025, you've got the power to write that story your way. So don't ignore it. Don't wait for next April to find out what you could have done better. Start today. Look at your income, check your deductions, adjust your plan. Because the new tax laws are here, and the sooner you take control, the better your wallet will feel. And remember, it's not about beating the system. It's about understanding it. That's how you win.